Welcome to Telltales. I'm Mike Nicoletti. Every week, along with my co-hosts Jason Wallace and Hunt Lawrence, we bring you the Cash Flow Memo. Get it at telltales.us. For the next 30 minutes, we're going to dive deep into energy, technology, and healthcare. So download the memo now and get started.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
For everyone on the phone who isn't in our zip codes, the weather is much better here in New York. It's been a marvelous winter so far for the fossil fuel business, but the fossil fuel business can do without the extreme weather we've had. And the main issue on Exhibit C, which is supply and demand of oil, is kind of pending because the U.S. has assembled an armada, Trump calls it, but no activity yet. And I think the price of oil is $7 or $8 higher than it would otherwise be because of the possibility of military action in Iran. I think a fair way to look at it as an investor is that there'll be some type of arrangement negotiated with the Iranians, but they will extend these negotiations as long as they can. And Trump famously said, a flippant kind of way, the aircraft carrier with 3 destroyers with it, they've got to float somewhere. So I think that the supply-demand forecast estimated for 26 on Exhibit C, I don't think they'd touch them now. It is interesting that the WTI hanging around the low 60s with the fairly broad consensus that it was going to move down closer to 50. It's probably curtailed enough U.S. activity and outside the U.S. activity so that this surplus crude capacity will become less of an issue. Just think it's going to take a long time because in past periods, China's demand growth was growing. I mean, look at 23 versus 22. China's demand growth was up 900,000 barrels. Now China's demand growth, which is stuck at 16, doesn't go up at all. And Europe doesn't go up at all. The U.S. doesn't go up at all. Where, say, in 23 versus 22, the demand went up by 1.4 million barrels. This prediction in 26 versus 25 is 400,000 barrels. So working off that surplus supply will just take longer. So in turn to Exhibit B, which has crude and gas prices from last Thursday, and it was 64. There's a fair amount of backwardation in the market. Namely, the futures price was lower than the current price. The 27 price was 61. That backwardation has typically been only about $1, maybe $2. So that 64 price was elevated by at least a couple of bucks. I think that situation, given the fact that it's in the Iranians' interest to just kind of keep this discussion going and to not give the U.S. a chance to try to chase down all the missile launches or whatever you do from a military point of view. I can see that situation with oil, WTI in the low 60s, Brent, which generally trades maybe $3 higher, in 67, 68. I can see the situation prevailing the whole darn year without too much change. Now, oil markets, commodity markets are very volatile, so to predict, it's just kind of a flat situation for the next several months is generally kind of a bad prediction. But I think that's the way it looks sitting here in the middle of February. As far as natural gas goes, we've had this incredible cold weather. but the Northeast has certainly done its share much nicer today and for the next few days. But I would say the main problem in the natural gas market was just totally unpredicted is that the demand for natural gas to make power is down in 25 versus 24. And here we have 26 predicted up. But when we look at the results for year to date, it's pretty flat. Now, what is going on here is a confluence of factors. The Biden administration and before that, the Obama administration was busily closing coal plants. It's not possible to close a coal plant in the Trump administration. They won't let utilities close coal plants. So there's more coal being burned. The tax advantages for solar and wind have been curtailed, but the industry is still finishing up solar and wind incentives where, if enough money was spent by a certain time, the solar and wind credits are maintained. So there'll continue to be more power from solar and wind, which is not reliable 24-hour power. It's because it's variable based on wind and solar conditions. But that does put power out there. Gas into power has been so reliable in the past 5 years, and LNG was so unreliable. Look at the LNG line, 10.7 in 21, 11.8, 13, and then down a little in 24. Now 25 is 16, 26 is 17 and a half. More LNG facilities are being authorized by the Trump administration. So that's very important. But what we have here is, rather than having gas well established in the $4 range, we have a strip for this year of $3.80 and next year for $3.80, despite the extremely cold weather. So it's the demand. There's nothing wrong with demand. I mean, I speak about in a disappointing way about gas to power, especially given everyone's saying data centers need more power and natural gas is a solution. But if you look at the demand, it's up nicely. LNG is kind of made up for the fact that gas demand for power is flat. But the darn supply keeps going up. And when you look at the supply, it's not the Marcellus, which is our biggest field. It's not the Haynesville, which is our newest kind of gas-only field. It's the Permian with associated gas. And in a period from 21 to 25, gas demand went up or gas supply went up by 15 Bs a day. 10 of that came from the Permian with associated gas. So, that just continues, and that is an issue. We certainly hope that, with investments in upstream, both oil and gas, and midstream, we certainly hope that gas holds close to $4. But given the kind of winter we've had so far, to not have $4 sold is definitely disappointing. Exhibit A is our cash flow statement for the United States government. Mentioned last week, Kevin Walsh is the nominee for being Fed chair. Believes down to his toes that the Fed balance sheet shouldn't be $7 trillion, it should be more like $1 trillion. That's going to be difficult to do. I mean, he's being nominated by Trump to bring down interest rates, and in fact, the Fed funds rate will come down for sure. But if you're taking the Fed balance sheet from $7 trillion over a few-year time period down to $1 trillion, that's going to put some real stress on the 10-year Treasury rates. And I think what our Treasury Secretary will do, Scott Bassett, is he'll just keep it really short with T-bills and under 1-year maturities. And that isn't necessarily the sound thing to do, but if the stress on the long market, everyone's seeing that the Google debt, it's selling $40 billion debt, including some 100-year bonds. I mean, between private debt and sovereign debt, there's just going to be an awful lot of debt to buy. It may be that in terms for the Treasury Department, in terms of managing our financing, just staying short will be the thing to do. The good news here is the deficit will be down. by 400 billion or so. What we need to do, I say this every Wednesday, we need to get that debt held by public as a percentage of GNP to top out at just over 100 and then head down. That is just very important and very difficult to do from a political point of view. The Trump administration is working hard on healthcare. You can't do much about interest, since even at 400 billion reduced spending, we'll still have an incremental deficit of 1.5 trillion. So just keeping your interest rate short isn't necessarily going to get the job done. Defense has been in the 900 range. Trump is on record as saying it needs to be lots higher. That may be just posts on Truth Social. That may not be real policy, but once again, we'll see. I think last week, going from the back, we got 18, 19, and 20 done. So we could do one page from the back and then one page from the front. So I think the next page we're on is page 17. For those who don't have the 20 pages in front of you, is FedEx, United Parcel, Nike, Costco, and Lennar. And in terms of influence from our second largest economy, China, clearly on some level, FedEx and United Parcel are impacted by that. Although when you read their annual reports and whatnot, it doesn't seem to be that much of a factor with them. Nike makes, I think, almost everything outside the United States. So China and the rest of Asia will be an issue. Costco, mostly in the U.S., I suppose any retailer is impacted by China. Lennar, I think what home builders need is lower mortgage rates, but certainly some amount of the gear that goes into new houses is sourced in China, the rest of Asia. Mike, Jason, any other comment on these 5 companies?
No, I mean, I guess FedEx and UPS are kind of a bellwether for trade, you could say. And while we may be decoupling from China, that production will likely shift elsewhere. Nike in particular does do some manufacturing and sourcing of raw materials from China. So that's probably most impactful, but also probably also quite navigable. And again, Costco, they'll just have to buy from their suppliers are going to figure it out. And Lennar is probably the least impacted here.
We go to the front, I think we're all the way to page 5, just Charter and Comcast, the cable companies. And then page 6, which is the telcos, AT&T, Verizon, and T-Mobile. They're impacted. I mean, they're all running iPhone plans with their customers, but I would say these 5 companies don't have that much China exposure. Mike, Jason, anything to add?
Yeah, I mean, I think the big China risk happened a while ago when Huawei was pushed out of the supply chain for US-based 5G services. So I think that's already happened. That supply chain's already reoriented, and there's preferred suppliers that are non-Chinese.
Just in way of passing, just commenting on these companies, the cable companies are encroaching on the wireless companies by selling wireless plans to their cable customers, and the telco companies are encroaching on the cable companies by being more active building fiber. So there's a second supplier in many locations, and then also using the spectrum to deliver wireless internet. The two of you have some experience from foreign investment, but it seems to me that the competition to provide internet service to the retail or small commercial customer is not going to do anything more than intensify going forward, assuming, and that doesn't have too much to do with China, except as Mike says, from an equipment point of view.
Yeah, totally agree. And I think you add SpaceX to the mix, which I don't know which page we're going to put SpaceX on when it goes public, but it certainly impacts this set of companies.
You can put it right on the Telco page because there are only 3 companies on that page, so, or reserve a spot for SpaceX. Page 16 is McDonald, Starbucks, Chipotle, Celsius, and Hilton Worldwide. I mean, obviously Hilton Worldwide is impacted everywhere. They don't really own the hotels, they manage them. It's kind of a neat business. It's always expensive for like Jason myself, but still an interesting business. Mike and Jason own Celsius and have owned it consistently. I don't think these type of beverages things, I mean, they're basically U.S. businesses, or do they, something like Celsius or Red Bull, or they, well, I guess Red Bull kind of started outside the U.S., but I mean, does it get to be where international is really important to these types of beverage companies?
Celsius would like it to be. It's hugely important to, Monster and Red Bull.
Right.
They do. I want to say half of Monster sales is outside the U.S. at this point.
Yeah.
So Celsius is branched into some European nations, but the sales are pretty small there so far.
And McDonald's, I assume they're and Starbucks have restaurants in China, but not a unmanageable percentage of their sales or cash flow.
Yeah, I think the risk there is, it's segmented to their exposure within that country and would be sort of similar to what Apple has experienced in the past, where the party has directed people, at least encouraged them to favor local producers over Apple in that case. But I guess you could see the same thing happening here, but it's relatively small.
Yeah. Page 7 is the card companies, MasterCard, Visa, and PayPal. I think, well, actually, Jason know much more about this, but things like MasterCard and Visa, other payment systems, have kind of never caught on in China, I assume. They have their own payment systems, which have become huge companies. I mean, Alibaba and Tencent, and I guess you can carry MasterCard in China, but I don't think it works anywhere, does it?
That's my understanding. Yeah, I think these are sort of insulated.
Now, page 15, we come to a healthcare page. I mean, just generally, we'll turn this over to Jason, but I mean, generally, an awful lot of the raw material for use by our pharma companies gets made in China, I guess. I always remember kind of India was active doing that too, but in all these pharma companies, there is China exposure on most of the raw materials, aren't there, Jason?
There are, yeah. And even some finished product as well. So they'll outsource manufacturing of certain molecules there too. So there's a decent bit of exposure.
Yeah.
More so in the generic space. So the generic drug makers might make all of their drugs in China, for instance. But yeah, it's becoming a bigger and bigger problem. And I think the way I'd sum it up is kind of similar to what we've seen in other industries like electronics and automotive, is that it's a prisoner's dilemma. The first one to defect and produce their goods in China gets a huge advantage, but then everyone goes there, and then all of a sudden China has access to all the IP of all the Western countries, and they've begun producing the same level of goods for cheaper.
Doesn't Vertex manufacture most of its in China?
I don't know do you know if it's actually made there? I know a lot of the chemical inputs come from there.
Yeah, part of that was their first actual commercial manufacturing site was in China. They were very innovative, I guess you could say, or at least they were looking at what everybody else was doing and said, well, let's skip the intermediate step and go straight to China to start manufacturing. So they have very strong ties there. And, one of the things we've seen since RFK Jr. came to be in charge of HHS is a lot of incentives to bring back manufacturing to the U.S. So Vertex is one of the ones that has announced some amount of money spent on bringing manufacturing back. So
I think most of the companies on that list have as well. The problem is the earlier stage biotechs they're startups, they're pressured for cash, and it makes a lot more sense for them to outsource some of their production, design, some of their testing to China for much lower rates.
Right. To the page 8, the Walmart page. This Walmart might have something in China. I don't know about Target. Don't remember that Lowe's or Home Depot have anything in China. Pretty sure car business. They don't do used car. Well, some of those used car retailing in China, but not CarMax or Kavan, I don't think. But obviously, the goods they sell are impacted. And you notice we've gone through a lot of companies and we haven't come to like rare earths or critical minerals or anything, but I guess it's just the nature of the companies we follow. Anything else on page 8?
no, I mean, I think Walmart does have some stores there, but I think it's more about the supply of products, similar to Amazon, that a lot of the things we buy, especially low cost things, are sourced from China.
Page 14 is interesting. We have these manufacturing businesses that are really excellent, kind of pull our gear. And Chinese entities, Japan entities, Korean entities go and try to produce the kind of equipment that CAT has made a business out of. They generally don't do as well. I think in terms of farm equipment, Deere is pretty much similar. Generac is generators for home use, apparently some activity in providing backup power to data centers. Transcom is an interesting case in point. Those are parts that go into commercial airplanes, and so they're they have to be approved. Once you're on the list, then you're not subject to price competition. Fastenal is this marvelous business, nuts and bolts and washers. Obviously, a lot of that comes from China, but they're so heavily involved in service that I don't think China's had too much of an impact on it. Anything else, Jason, Mike?
So China's building a domestic airframes business, building their own version of Boeing. So I wonder what the future of TransDigm will look like supplying those companies there. I don't know if they've spoken about that.
Page 13 gets into the banks. I don't know what percentage of their cash flow. I mean, if JP Morgan, who's the largest by far here, through cash flow of over $60 billion is compared to around 20 for Morgan Stanley and Goldman Sachs. I don't have much of a clue about what percentage of that $66 billion comes from activities in China. I mean, I would assume for each of those, it probably is not more than 10% of their, of their cash flow. But I don't think there's any particular. These people operate on a worldwide basis. China's the second largest economy, so they'll be spending plenty of time servicing China, servicing the companies that are based in China. Interactive is a little unusual as compared to the others. We wanted to put it on here. We think it's got awfully good long-term record and some good prospects. So it's on the page with JP Morgan, Morgan Stanley, and Goldman Sachs, not because it's, a kind of a brokerage operation, but because we're looking for a place to fit it in. Mike, Jason, anything on that page?
No, I don't think so. I mean, they certainly have exposure. I'm not sure what the how great it actually is, but predominantly I'd say JP Morgan and the other investment banks.
Yeah. I'm going to cover energy pretty quickly. This is page 12, 11, and 10. It's an area where I've spent all my life. Well, also 9. I don't believe China has too much of an impact on any of these companies, even the big integrated companies. just Chinese have a couple of big oil companies, three of them, I think, PetroChina, CNOOC, and Sinopec, and they're pretty active, not just in China, but on a worldwide basis. So I don't think China is much of a priority for the large companies and for the independents on the EOG page. I think EOG may have some concessions offshore shallow water in China, but I just don't really think these four energy companies, anything's really impacted by China. With that, I think we finished the 20 pages. We will get criticized if we don't spend at least some of the last 5 or 6 minutes on healthcare. I guess maybe first, since we haven't talked about page 1 at all, provide you, Jason, any page 1, 2, or 3, or 4 news that's worth covering before we put things off till next week?
There's probably a lot.
Yeah.
Yeah.
Well, I don't think we've talked about the CapEx announcements. So over the last week and a half or so, the first big announcement was Meta saying they're going to spend $135 billion this year on their CapEx. Google one-upped them to $180, I believe, billion. And then Amazon came out and said they're going to spend $200 billion.
Nice.
Microsoft, I think, already had announced the end of last year they're going to spend roughly $150 billion. So once you throw in Oracle, I believe that number gets over $700 billion. So just out of curiosity, I looked up where that falls on the ranking of nations' GDP, and it's about equivalent to Belgium. It's a lot of money.
Let's just go to the chip page 3. Between these companies, the videos designer, AMD as a designer, Intel is having some capacity, ASML being a supplier, Taiwan, TSMC being the absolute linchpin of all this. I mean, is there a capacity to turn out enough chips to accommodate $700 billion of capital spending, or is that going to be a limitation on people's plans?
It's a good question.
My feeling is they're all reliant on TSMC, and they won't have the capacity to satisfy all that. Now, if these companies can't spend all the money that they've budgeted, that's probably viewed as a good thing by the market. But I think they would love to spend all that and more. I mean, they're spending all of their free cash flow. And then, as we've seen with Google's, and most of them, they're taking on debt at this point.
Yeah.
Right. And we don't know what the split of that spending is. I mean, obviously for Meta, it's pretty predominantly weighted to data center, but we don't know what percentage of Amazon's spending is going to be data center. And then assuming we did know, let's just say Amazon's was 75%. We don't know what percentage of that is going to the construction of shells for data, to house the equipment, and what percentage goes to the equipment. I do get the feeling that there's only a limited supply of land in the U.S. that is maybe ideal for a data center. And there's different types of data centers that have different ideals, right? Low cost power being one, and another being proximity for latency purposes. So there's a combination of factors that maybe could bring a case. You could make a case for a land grab of sorts, and the good reason to start acquiring a bunch of land and starting these projects so that you have them ready when you want them.
Yeah, and a handful of states there's regulatory risk here. A handful of states have said, we don't want any more data centers.
Yeah. Microsoft has led the charge there, saying that they will pay more than their share of incremental power to their data centers. By that, if they all seem to want to buy off the grid, because I think they're anticipating the next administration going back in the green direction. So they want to reduce their carbon footprint from what it otherwise would be. And, any recent winter solar projects, generally it's one of them as the purchaser of the power. So if they're grid connected, they can say they're using power made from wind or solar nuke or whatnot. The problem when they announce these centers, and the reason they get so unpopular with the governors, and and every other elected politician, power costs are up a lot. Natural gas, which is an important fuel and power. Most utilities who have natural gas capacity or contract to buy power from natural gas facilities have a pass-through for the increased price of gas. And while gas can hold $4, it's still up significantly from $2.60 or something, or whatever it averaged 2 years ago. So you already have increased power prices because of increased gas prices. Then what you have to do, since a data center is going to require a lot of power, you have to kind of wall it off and say, incremental cost of that power you're going to pay, so it doesn't increase our residential rates. And that's going on now. I think that's pretty good. I think our whole grid will be more resilient when we get more of this done, but I do not believe that power is the constraint here. Mike or Jason said that I talked about the shell of the building or the power. We figure that to build a gigawatt of data center capacity is about $2 billion for the power and the outside of the buildings, the shells of the buildings, and then somewhere between $30 and $50 billion for the server racks and the chips and memory and everything else that goes in. So, $700 billion, divide that by 50 or 40. The difference between 30 and 50 is whether or not you're using NVIDIA chips or both Google and Amazon have their own less expensive chips. You're talking about, I don't know, 10 gigawatts. I think that power is available. I mean, it doesn't have to be there today. I don't think power is going to be a limiting factor here. We'll get into next week Musk wanting to send chips and servers and whatnot into space to use solar power. I think to a certain extent that's to try to get people more interested in the IPO of SpaceX. But the other thing, I just don't know how Taiwan Semiconductor, everyone, whether you're the Google chips or the Amazon chips or the NVIDIA chips or whatever Apple's going to use for its service centers to use the Google language model to update Siri. I just don't know how TSMC has the capacity. On the other hand, TSMC may not be that great an investment because you have the macro problem of suppose China decides to invade. So kind of a puzzle to know what to do. Any closing comments, Mike or Jason?
On that topic of Taiwan, I'm going to totally butcher this, but I was at a conference last week and somebody talked about this, and there is a Chinese proverb, for lack of a better word, and the long and the short of what it essentially means is you don't attack until you already know you're going to win. And that was an interesting way to kind of think through China and Taiwan. If the goal is reunification, it will not happen until they are assured of victory. And they operate on very long timelines.
Yeah.
Doesn't have to be today. Doesn't have to be tomorrow.
I think it can be a political victory.
Exactly.
Sure, their preference.
I think after Hong Kong, they probably would much prefer that.
Yeah. Jason, we haven't done a proper amount of healthcare, so we have to do at least a third healthcare next week.
Deal.
In the meantime, everyone be well for the next 7 days. We'll be here exactly 7 days from now, and thanks very much for listening. Take care, everyone.
The views expressed on this podcast are the host alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the host nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to and no reliance should be placed on the fairness, accuracy, timeliness, or completeness of this information. The host and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future and may or may not hold positions in the securities mentioned.